morning, good evening, good afternoon, everybody. Welcome to the Trading Battle. This is Boris Schlossberg. Welcome to our second episode of season 2024, the Trading Battle, where we trade for charity, we trade for fun, and we trade for education. So hopefully you guys will all enjoy it. Make sure to ask us any questions that come to your mind. Post them in the comments. We'll be happy to answer them as the show goes by. Today, I have a very, very special show for you today. Two veteran traders, both gentlemen I know very well. We have today Andrew Lockwood and Ashraf Laidi. Very, very excited to have this battle today. Let's everybody say hi to Andrew Lockwood, the man of the hour. Andrew is a 30-year veteran trader. He's an old pit trader, as you can tell from the jackets in the background. That's how far back he goes. And he's certainly seen it all, done it all, and traded it all. And it's a pleasure to have him on the show. Andrew, latest project is the City Traders, which is a trading community and a new platform that he's going to be opening up that he's going to tell us a little bit about. But Andrew, welcome to the show and welcome to the Trading Battle Pit. How are you?
Absolutely. Thank you indeed, Boris. It's good to be back. We did a few of these last year. Great to see season 2 launching as well. So I'm excited to be part of it and in session 2 as well. Looking forward to facing off against Ashraf as well.
Exactly.
You mentioned those trading jackets there, Boris. It was my birthday yesterday, and I actually had a dinner on the old trading floor in London.
No way! Oh, that's right. It's a restaurant now, right?
Absolutely, yeah. I was in there looking at where I used to be standing, throwing around all those all that money back in the day, and it's changed so much. But it's quite nostalgic going back to the trading floor.
Now you're throwing money in a different way, but
absolutely, yeah.
That's fun. Yeah, that's true. I totally remember that. There's actually, it's funny you say that because the old Los Angeles Stock Exchange was turned into like this really fancy nightclub, and I remember, my wife and I dancing at that nightclub in the Stock Exchange, and I was thinking that's a pretty good venue for it. So yeah,
absolutely, yeah. I mean, it's great. I mean, I remember I stood exactly where I used to stand, sort of throwing orders into the T-bomb pit, and actually walked past. I lost about 120 grand on about 5-minute trade once, and I stood in exactly the same place. It was on a dodgy hand.
Did you have a little bit of PTSD? Did it bring?
Oh yeah, it was great. I mean, it was a dodgy hand signal at the time, which is why I lost all the money. She thought it was. I actually moved the T-bomb market a whole point at the time.
Right.
I sold 100 contracts. She wanted to sell 10 contracts, and
right. It reminds me of like those comedies when they do the like auctions at Christie's and or Sotheby's, and some guy walks in, he scratches his nose, and people think that's a sign that he's bidding, and all of a sudden he's bought $1 billion case.
Well, it was because it was a T-bomb pit. It was quite liquid during the London time. I had sold 100. She said no 10. The whole market knows now I've got to buy back 90 contracts.
No, so they're not going to let you out of it, right? Oh, it's just brutal. No honor amongst thieves. I hear you. Speaking of gentlemen who have been around for quite a while and know their way around the markets, let's everybody say hi also to Ashraf Laidi, who, hello, my friend. Ashraf right now finds himself in the Middle East. I think he's in Saudi. But of course, he's a man about the world. He's been all over the world. He speaks multiple languages. And more importantly, he speaks the multiple languages of the markets. He is the master of the intermarket analysis, an author of the book, and is now an independent strategist, basically. He is the founder of Intermarket Strategy, author of Currency Trading and the Intermarket Analysis. And his analysis really extends to a study of how all markets interact, which is going to be fascinating because I got to tell you, there's just so much interesting stuff happening underneath the surface that nobody's really paying attention to, including me. And I'd love to, get your insight on it, on a couple of things. He's currently, he's been around the market for quite a long time. He's one of the OG FX analysts. He was considered to be one of the best analysts by FX Week. And he's obviously always on media. He's on Bloomberg, CNBC Arabia, FT, BNN, everything. Did you do some media when you were in Saudi?
No, the media work is the stuff of 5 years ago, 6 years ago. Now we're just doing the markets.
I see. Okay, yes. I actually, I still continue to do media, but I got to tell you, it is a grind sometimes to do it. I totally agree. So I want to just sort of talk a little bit about our first challenge. And I think there's just this, and maybe bring Ashraf into this thing because of the intermarket analysis. The thing that nobody's talking about right now, our first challenge really has to do with the Fed. Everybody thought the Fed was going to cut rates, inflation was over, blah, 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 blah. And it's all of a sudden everybody's realizing that no, inflationary pressures will still remain. The U.S. economy is booming, whether you like it or not. It's it's popping. As a matter of fact, you hear my alerts going off because equities are starting to rally again. I think anybody who's intelligent is going to find it very difficult for the Fed to lower rates into a growth environment where we're still printing superior numbers all across the S&P. The other thing I was going to ask you, that within this whole disconnect between what the market thought, what the market is doing, is what's going on with Bitcoin. I mean, like, this is, talk about intermarket analysis. 55. This is a rally that everybody's ignoring. I mean, this is the thing, like it's like the inverse of the past when everybody was in Bitcoin. Now I know nobody who's trading it. The thing went from like 18 to 55. It is the biggest, it's bigger than Nvidia, and nobody cares. Like, that's just fascinates me on the intermarket analysis. What do you think is happening?
Well, in a way there, Boris, you're slightly stealing my thunder for maybe challenge 3 here. So I'm going to be a little bit coy on this one.
Okay.
But obviously Bitcoin, I mean, it's going absolutely bonkers, isn't it? I actually put it out into my chat room this morning about what do we think about this for this coming up challenge that we're going to do in a moment. Do we buy it or do we sell it? Of course, it's been torn up, tearing ahead at the moment. Obviously, on the ETF, you've got the halving. I don't know too much about this, but you've got halving next month or a couple of months' time as well. Yeah. And there was one big outfit that bought like $150,000 worth, I think, yesterday. What was it? US Micro Strategy. I think they bought. They went in.
Oh yeah, he's been buying. He's been buying it for his treasury. He's just a huge. He's been Bitcoin bull forever.
Well, I tell you what, Boris, and I say this to my trading community. I don't know where it's going, but I know pretty confidently when my kids are at university in 10 years' time or whatever it is, they'll be talking about Bitcoin in some way. In 10 years' time. Yeah. So why not now just squirrel some away every month? It could be one of these Berkshire Hathaways or one of these Microsofts. If you invested $500 back in 2024, now it's worth $500 million or whatever it is. So for me, I mean, it's something that you can't ignore. Even in our space now, we're using it to buy things online as well. So I think the future's that's still going to be there. Whether all these other altcoins will drop out at some point, but
can I add?
What do you think within the intermarket analysis? How does that play into your thing? I was going to ask you because you're a big Bitcoin maximalist.
Well, yeah. I mean, putting labels aside, here's the thing. Okay, so the problem with intermarket analysis when you're doing an event like this one, where you have to put in a trade and it's sort of relatively short term, is that it takes a while. It's probably not apt. So I start by looking for by the top down. I'm looking at the thing that is hurting the market. What is the thing that is hurting the market? I'm looking at the 10-year yield. The 10-year yield, as long as it does not go above 4.34, which is a moving average, which is a right shoulder, then we are fine. Okay, as long as it does not go above that, gold is not going to hurt. What does gold hurt? Meaning gold does not go down below 2017. Meaning NASDAQ does not go down 150 pips. As long as yields cannot break above that big resistance, these guys, the pain trade cannot happen. Okay, so this is but if you want to add Bitcoin to the conversation, listen, where do we take it from? Look, I was in the 8-cap webinar that I did with you guys.
Yeah,
and with
that's why I was asking you.
I was looking at a 16 level. So gold to Bitcoin, whenever gold, whenever the Bitcoin went up, and it hit the 16-ounce level, it was either a pivotal resistance or a support. That means if it failed it came back down. Case in point, July. So in the rally of, I know we're supposed to be trading and people are itching their ears and this. Come on, guys, stop talking. We always talk all the time. I want to do some trading. What we're about to say is probably much more. What we're about to say is probably much more important than the few trades that we're going to do. So please listen, because we've been talking with some heavy lifters here in Saudi, and they agree with a lot of it. And this is as follows. Basically, you remember in Bitcoin when it went above 15 and 18 and 19,000 and at 25,000. It was an inverted head and shoulder. The target was 35. Where did it stop in July of last year? 31. And I'm like scratching my head. Why did it fall $4,000 out of the inverted head and shoulder target? And then I'm looking, the resistance was 16. It tried to, so Bitcoin divided by gold ratio, it went to 16 and it failed. Well, once it break it, that's it. You look at the ratio. Once it broke 16, which was in October, it went up. Now that we are at 27, when I'm looking at it, I'm looking at Bitcoin has broken above a resistance against the NASDAQ, i.e. Bitcoin divided by NASDAQ, you had a triple top, it was broken. Bitcoin divided by gold, we're broken.
Right.
57,000 is a key Fibonacci resistance. 57, after 57, we might go to 62.5 because based on an average percentage increase in the 30 days to each halving.
What's the all-time high for Bitcoin? Is it somewhere in the 60s?
69, 68, something like that.
Okay. I mean, it'd be really interesting to see where it goes within that context. So,
sorry. Just one last thing. So yes, MicroStrategy. Yes, Michael Saylor. Blah 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 blah. So here's what's important. Guys. Those 11 ETFs in the first 30 days of trading. The 11. Do you know how much Bitcoin? Not in dollars. Do you know how many Bitcoins they bought? Say a number.
I don't know.
280,000.
That's a lot.
Do you know how many Bitcoins were issued?
No.
10 times less.
Yeah. Right.
So if you talk about supply-demand imbalance in uranium or supply-demand imbalance in oil, supply-demand imbalance in Bitcoin.
Well, yeah. I mean, the ETF now makes it essentially seamless for any investor across the world to buy Bitcoin, for grandpa like me to buy Bitcoin without having to actually interact with Bitcoin itself. And I think that's what you're seeing. It's that proxy dynamic that's really kind of driving. It's fascinating.
Or with Coinbase. Yeah.
It
democratizes the investment in Bitcoin. It reaches out to the people in Kentucky, in Alabama. They don't have to deal with the password, with the phrase, with the seed.
Buy the ETF from Charles Schwab or any of the
and the fund, the big funds, they've got to get involved. They can't be missing out on this. You know, they're competing with each other, and they see this sort of meteoric rise. The funds now can get involved, and you know, it just makes it much more accessible. And
bringing it back to the Fed, bringing it back to the idea of inflation, bringing it back to the fact that, you know, kind of Bitcoin is sort of really screaming. I mean, it's not that if you're sort of a fundamentalist, it seems like Bitcoin is screaming higher price level. You know, price. Sorry, let me rephrase this. It's not so much inflation, I think, as sovereign debt concern.
I agree.
Let me kind of bring all of this together. People are afraid that if Fed doesn't lower rates, U.S. budget deficit, which is massive, is going to be consumed by interest rate costs. We're almost on a pace where like a quarter of all taxes go to nothing more than servicing the interest on the debt. It's the most non-productive use of capital you can possibly imagine. So if interest rates remain high, more and more of the U.S. tax base will be just simply consumed by interest rate payments. That's the concern. That's why I think you have this, you know, sovereign debt worry that's translating into a bigger bet into Bitcoin. So given all of those things, where do we think the Fed is going to do? What's the trade here going forward? What's the trade you guys are going to make, given the Fed that the we have lots of fluctuating experiences that the Fed is facing?
Okay, so if I can take the lead on this one, I think the Fed have basically mistimed this, and I think they've basically been behind the curve as they were basically when they started to lift rates, you know, two years ago, and you know you're seeing, you know, they've committed themselves to this sort of dual mandate, haven't they, of getting inflation back down to the 2% level, which was supposed to be transitory at one point, and they basically committed to the fact that they've got to get this inflation down to these levels. But you're seeing a real strong job market out there at the moment. You saw NFP last month. What is it? 355,000 again, 170,000. You know, you're seeing inflation, the CPI up there at 4% again. You know, so because they've committed to this sort of this dual mandate that they have to keep it, they are going to struggle to be cutting rates at this moment in time. I think the inflation picture is still very strong out there. There was talk about, is it going to be a soft landing? Now there's talking, is it going to be a landing at all? And I think that the Fed basically are going to be in a position where they are going to be, pushing these cuts further down the line. I mean, towards the end of.
If that's your view that it's going to be longer for later, basically same name. What's the trade here for you? Well, I'm gonna make you.
Yeah, and that's exactly it. I mean, but just before I talk about the trade, I mean, this is the Fed Watch tool I always look at, right? Yeah. So this is the Fed Watch, and it gives you sort of the estimates of the next cut and what have you, and what have you. So at the moment we're at 5.25%.
Right.
The March meeting, we're going to be at 5.25.
Yes.
It's not until June now. If you go to June, it's still only a 63% chance that they're going to cut in June. So the likelihood has really been pushed out on the futures markets. For me, and I think Friday or I think last week was a telling sign of what happened in the dollar against the euro. Okay, so this level here at 109, that has clearly got dollar buying liquidity was tested on this daily chart. You see this long high wick candle into that. That shows me that the moment we got up there with all these, thinking they're selling the dollar, what have you, we saw a whole bunch of liquidity buying. That put in this bearish candle. I don't know where this is going, but I will safe to say that if we get back up to 109, 109.50, there's going to be dollar buyers up there. There's liquidity up there of dollar buyers. So I'm taking the euro dollar lower into the PCE reading this Thursday. The PCE, by the way, for those that don't know, stands for personal consumption expenditure. Right. It is the main measurement that the Fed use when they're determining inflation. And I'm looking at the recent round of CPIs and jobs and what have you. I think this is going to be an upward pressure on PCE. I think the dollar is going to get a bid as markets will begin to begin to agree that rates aren't coming down anytime soon. So I'm looking at this possibly moving back down. So shall I place the trade now, Boris? Can I do that? Yeah,
you're short. You're basically going to go short euros here.
I'm basically going to go short the euros. I'm going to have a stop above 109, basically. I'm going to do this here on the Trading View platform. So what are we going to risk? I'm going to risk. I'm quite confident about this, Boris. I'm going to go just for the challenge, and it's for my great charity. I'm going to risk in 3% on this.
Okay.
I'm going to have a stop above 1.09, say 30, and I'll look at my profit targets. My profit targets are going to be down here, I think, at around the 107 level. So we'll put in 107 there, 1.07 there, you go, around that zone, and we'll place that. That's not going to work, is it? 1.07. Yeah. There you go. So I'm going to place that, and that is my trade. Okay, so my stop's above the buying liquidity.
Okay, sounds good. Sounds like an interesting trade. We'll see how that plays out. How about you, Ashraf? What's the trade for you given the Fed fluctuations?
I don't really disagree with Andrew. Okay, so
just place the trade double the size.
Whatever screen I'm seeing, your screen. Yeah, yeah. Listen, okay. So you're seeing. Can you see this chart? These graphs?
You see your chart
right now. Mm-hmm. All right. So if you expand these, so these are the interest rate expectations. Everybody's talking about March. So guys, I'm talking about May. Okay, the May. So when this goes, so you see this is minus 0.19. All right. So basically, the expectations of a rate cut in May is only 19%. Okay, 19. And as you can tell, it was 100%, and well, it was more. And the June rate cut, it is 74. There's a 74% chance. So there's a 74% chance of a 25 basis point cut in June. So as these graphs go up daily or minute by minute, as they go up, they reduce expectations of a rate cut for this given meeting. Okay. Now, and I think that, so that's one thing. Then if you look at the 10-year yield, and this is what I was looking at, it's very important. If you think this is a head and shoulder, it may be the right shoulder. If you look at the TLT, it's the 91. So the TLT, looking at the price of a bond, so inverse. But as long as long as yields cannot break above 4.33, gold will avoid sort of the bad case scenario. So gold, S&P, NASDAQ would want the yields to be trapped here. If you're going to ask me what is the Fed going to do, I think things could turn out bad fast. I think they're probably going to do 2 rate cuts, not 3 or 4.
So
not that it matters.
You think the U.S. economy could kind of dive off a cliff quickly, and that's going to create emergency rate cuts? Is that what you're saying?
Not dive off, not dive off. But listen, okay, I'll ask you this: do you remember June 2019? Do you remember when Powell cut rates?
Yeah.
You remember that? Do
Yeah.
you remember when he pivoted? Was the economy falling down a cliff? No. It was a trade war between Trump and the Chinese.
Right.
The supply chains were broken. There was COVID that came in 5 months later, because actually October, not.
Right.
But why did they cut rates? And the stock market was booming. Why? Because there was a problem with the debt. There was a problem with the we had almost a repo market accident. So I think we may have what you call a treasury market event. Remember September 2019?
Right.
We may have that. So now going back, and so the liquidity. Now, if you look at the gold chart right now, it looks like it's pushing higher. But I do think that in a range-bound market, so let's keep it legit, guys. Let's keep it. Sorry about that.
You retracted.
Yeah. Let's go to. Sorry about that. So I think in a range-bound market, you have to ask yourself. So if you think 242, 241 is a resistance for gold, you're going to have to ask yourself: is there going to be a catalyst between here and Thursday that is going to lead gold to break out? And usually it's no. So like 2 days ahead of the Fed, 2 days ahead of a twin data day, like Thursday jobless claims, Thursday core PCE. These are big days. It is not in the interest of the big markets, euro, dollar, S&P, gold, to break above key levels. So it's a range bound. So it would make sense for me to go short gold.
Yeah.
Right. So I would probably. So where's the market? It's at 236.
Yeah.
What do I do here? So I'll put a short.
Hit the sell button depending on what size you want.
Yeah. So it's a sell. Okay. 236. So I'm targeting. All right here. So I would be targeting. So I'm looking at 220. Yeah. 225. Okay. 115.
And what would be the stop?
Yeah. So the stop. That's the problem. So guys. So what you do. And here is a course about, a 2-minute course about stops. Do you do stops mainly on a 2-to-1 reward to risk ratio? Do you do it on a 2 to 1.5? Do you do it strictly as a function of technical analysis? All right. If your 2-to-1 tells you that your stop is at 237, but the big resistance is at 240, then what are you going to do? Right. But so when you married both, I would say, so let's do this. So the stop, let's do this.
So you're basically saying, Ashraf, you put your stop where you don't think you're going to get hit.
I think this is one of my priorities, not just because I religiously abide by the 2-to-1 ratio. How do you do it, Andrew?
Exactly that. You put your stops where you don't think you're going to get hit, and if you get hit, the premise of the trade is over. So get out and think again.
The other side of that conversation is, where do you get in? Do you have to wait? Maybe you wait it and you put a limit order. But for the sake of this discussion, we're going to make it a spicier. We're not going to do it a bit. So if I'm targeting 115 pips, okay, 115 divided by 2 is what? Okay, so it's around 70. But I'm doing a stop as around 35. Shall I increase the stop a little bit more? Shall I do it?
Yeah.
243.
I think if it's up there, you clearly wrong on the range idea, and it's going to try to break out beforehand.
And I'm doing 0.8 lot, and
okay,
risking 5%.
It should work out the lot size for you, I think, if you put in the 5% there.
Let's do that.
Okay. All right. So we short. Ashraf is short gold on a range bound thesis, and Andrew is short euro dollar on the idea that U.S. dollar is going to be bid because Fed is just going to face a stiff PCE number. It's not going to it's not going to be dovish in any way, shape, or form. Let's take a break for a second here, talk a little bit about what we're trading for, because both gentlemen are trading for charity here. Always in TTB, we're trading for charities. We've given tens of thousands of dollars in charity in these competitions, so always a good thing to do. Andrew, tell me a little bit about the Macmillan Cancer Support. What is this charity you're trading for? Tell us a little bit about it.
Okay, so basically it is exactly that. It does what it says on the tin. It is a cancer support. So it has a personal sort of thing for me. Both my parents, years ago now, died of cancer, and obviously, if anyone that's experienced that would know that the final few days is very challenging. These people came into our house 3 or 4 times a day, just looking after. They also took them into a hospice as well. And I just can't believe the compassion that these people show to people they don't even know at the final days of their lives. And it just, and certainly for my father, it just made his final days on the planet more bearable.
Wow.
So for me, all the support that I can give them, I do. Everything we do, we go down that road to support these people that basically don't do it for much money. It's pretty much a charitable organization, and they deserve, I think, as much as they can get.
Wonderful, wonderful. Thank you. That's nice. Ashraf is trading for UNRWA, which is the
United Nations Relief and Works Agency. It is the United Nations, and it is really targeting the aid to the Palestinian refugees and what's going on there. As you know, what's going on in the events in Gaza, there's a lot of basically families and kids. It's been very hard to actually send food and water supplies. They've been moved from North Gaza to South. Now they are expected to go to Rafah. I think regardless of your take and your opinion on the situation between Israel and Hamas and Gaza, I think there were a number of bodies there, United Nations, that were providing aid, and it is not passing through. And I am from Algeria, but I do have a sister who lives in Palestine, in Ramallah, in the West Bank, and I have a niece. And the niece has, even though she is working in the UK, she's not a refugee, but she's grown during a lot of turbulent times when she was there. And even though she is in the haven of London and she studied, it's still hurting her, and it's still affecting her emotionally. But this is for the people who are living in tents and in camps and who are lacking food and vaccines and so on and so forth.
Yeah. Okay. Very good charities. Thank you, gentlemen, for your efforts here. Let's now get into our second challenge, which is going to be a little bit more shorter term in duration. I think sort of like, in a way, what we're looking for right now is to place a short-term trade. Now, short-term trade is, of course, in the eye of the beholder. If you ask me what a short-term trade is, it's the next 10 minutes. I don't know. I'm actually curious. What does short-term trade mean for you, Andrew? What is the duration for you on a short-term trade?
Okay. I mean, when I was in the trading pits back in the day, literally it was, I'd write the trade on one side. By the time I made the trade, chances are I got out of the trade within milliseconds. So it used to be milliseconds. I'm way too old for that now, Boris.
Yes.
So I now have really dialed it up a notch. So short-term trade for me would be no less than 1 hour for me. I'm a intraday trend follower. So I like to follow trends. I think trends are more established on the higher time frame charts, on the daily and the 4 hour for trend direction, entries on the 1 hour. So much lower than 1 hour. I just haven't got the mental capacity for it now. And the other thing I will say to my students is this: most traders, when they're coming into the markets for the first time, most sort of rookie traders, novice traders thinking about getting involved in day trading, I think it's a give me that the most hardest thing to conquer when you're trading are the emotions. I think we all agree that those are the biggest challenges that most traders face. Well, if we all agree on that, doesn't it make sense to trade less? Doesn't it make sense to, well, if it's emotional, don't trade as much. Then the emotions won't be as in heightened. So I always say that if you're struggling in trading, just dial it up a notch. Go up to the 4 hour, go up to the daily chart until you get more sort of in control of your emotions. So 1 hour for me is the lowest I'd go intraday, personally.
Interesting. Okay. What about you, Ashraf? What is the short term mean to you? I know you're a trading junkie. I've seen you trade.
Yeah. You know what? I just realized the trade that I placed was a limit. was not a market. So what I'm going to do, I'm going to open a market and I'm going to cancel that one. Okay.
That's fine. That's fine. We'll adjust it.
So let's do that. Okay. And then I will cancel the other one. But what is a short-term trade? Listen, I thought the one that I placed here is a short-term trade, the one earlier about gold, if you think about it. No, yeah. So for me, short-term is defined by time, and it's also defined by profit. Okay. How soon do I get to it? You know, if
so what does that mean? That's interesting. What do you mean by defined by profit? What would be like a definition of profit for you?
Okay. So if I'm day trading, and I'm if I'm day trading and I'm looking at gold, we do that a lot. It's at 2035, and I want to target a 20, a 25. For me, I'm expecting that is going to be hit probably today, or maybe by the end of the day. If we do hit it, if I'm targeting a 25 and we get to 27. Probably I would close it and it would end up being defined as a relatively short-term trade.
Right.
What chart would I be looking at? I would be looking at the daily and the 4-hour chart. Okay.
Right.
Now,
it's actually a great question. I want to stop because I think this is something that novice traders don't appreciate. And correct me if I'm wrong, Andrew, too. I'd love to have you on this conversation, which is you have a target, and novice traders kind of have this monomaniacal view. Oh, you have to hit the target. The target, I think, the more you trade, the more you realize the target is simply a guidepost. The market doesn't always cooperate and say, "Oh, I'm going to perfectly hit you to the tick. I'm going to hit you to the pip of your target." If you are directionally correct and you're close to the target, and you're seeing that market is stopping, market is not moving, or market is retracing, I will very, very frequently close out, even on my scalp trades. If I'm, my scalp is +10 and I'm +8 and I'm just not moving, I'll take it, because it's exactly what Ashraf said. It's not about being right; it's about being profitable. What do you think about that, Andrew?
I totally 100% agree with that, Boris. And I would say one of the biggest problems that traders, that fall foul of is that they're always checking their trades on the phone and what have you, and always have the emotions are up and down and what have you. I prefer to have the set and forget mentality. Basically, I'm in the trade. I've established the risk. I've accepted the risk, and I'll let it go. Now, and I won't be watching it throughout the trading day when I'm on that trade. However, if I'm at the screens and I look at the trade and it's close to profit target, I'm not just going to say I'm 4 pips away now, I've got to stick to it. I'll take it because it can go either way. But what I will not do is watch it all the time, because then my emotions will become in heightened. But if I'm there at the screen, yes, I will. The problem with a lot of traders is when they see their profits and they see their profits eroding away, they grab at the profits on the way down. And if you were to do that, as many do, throughout the year, you're grabbing smaller profits than you're taking on your than the losses, and that ultimately will be, what do they call it, death by 1,000 cuts.
But Ashraf, like on the other hand, somebody explained this, I think, really brilliantly the other day to me, which is that if you're 4 pips to target, now your risk reward ratio actually isn't 1 to 2, like your original risk reward, because everything is dynamic. Now your risk reward ratio is actually 1 to like 220, meaning that if you don't take the profit here and it goes back against you, you're basically trading for 4 pips against like a 200 pip retrace move. That's what people don't understand. It's not static. You're still in the mindset of when you place the trade. You need to be in the mindset of when you're in, when you're in the trade of the market, right?
Good point.
Yeah, that is one thing. And the other thing is that, are you going to play with the trailing stops? I don't know if you guys do them, and do you use the mental stops? The other thing is that what happened is that you are targeting, let's say, you are 90% close to your final target. Sometimes what do? You always have to question yourself. You have to question yourself. You have to challenge yourself, and then you say, you know what, that 2025 target for the short for gold, I'm making money. Okay, what do you do after you lock it in, after you realize it? What do? You say, but I don't want to go against my original self. Should I open a new trade and target that? The problem is when you're shorting lower. Or if you're going long, you are going long at a higher level
Right.
you are more vulnerable and subject to any natural retracement. So what do? You can still, after you're locked, you can still buy, but you go at a smaller size because you're more vulnerable to the natural retracement. You don't go into the original size. And I think people, what they should really know here is sizing. Is that, and I told the guys, at the event in Saudi here, with people are going with heavy leverage and so on and so forth. I said, listen, you can have either a sub account for your trading account. You can have one for your scalping, one for your day trading.
Right.
And because let me tell you guys this, when gold was 1,900, everybody's dream, they said, when gold gets to 2,050, I'm going to retire.
Right.
It is now gold is at 2030, and it's the most boring moment for everyone. Why? Because they tried to scalp their way from 1950 to 2050, and they lost their shirt with the leverage.
Right.
But they did get to the final destination. But when they got to their honeymoon destination, they were already totally smashed.
Yeah, interesting. Yeah, that's true. Although I've seen you do this also, where you have a long position, like a positional trade. Let's say you'll be long gold, like you said, for 100 points, but then you have a sub account where you're scalping against the position all the time, just on smaller size, which is also an interesting idea, because what that does is it gives you the strength of mind to hold a longer position that may be going against you, but by essentially, making small profits on the scalp side while it retraces.
Yes, Boris. Yeah, I don't want to extend too much, but I'm glad you touched upon that. And so, in the United States of America, you're not allowed to go long and to go short, or the same size. And if you do, then it's FIFO. And
the only way you could do that is to have two separate accounts. Yes,
exactly. Bravo. So I don't have to have it, dude. But so I can do it here outside the US without opening, without having. I can do it with the same account, and it's called hedging. But bravo, you said it. It's this. You do it with a different size. When so if you are impulsive, is structurally long, and the market goes against you, and he said, oh, I think it's going to go further down. So you can take a short, but you have to really determine your take profit. Because what happens, the big mistake is that, yes, you're long, you're losing money, the market goes against you. You said, actually, I know that it's going to go down another 15 pips. Let me short, and I lock it. When it hits those 15 pips, are you going to stick with that and go back to and revert to your original long that is losing money? What do people do? A little bit more. I think it's going to go down a little bit. I'm going to short a little bit more, regardless of the size. And then before you know it, you're married to 3 different wives.
You got it. All right, gentlemen, time for us to place our second round trades. Thank you so much. Let's see the short-term trades that is to your liking. We'll start with Andrew. Andrew, what do you think is on your plate that you'd like to do?
Okay, just for just to sort of mix it up a little bit, I'm going to move away from Forex just for now. Obviously, we've got the euro
coming out of your habitat. Tell me, what are you going to do?
So I'm basically intraday, as my followers know, I'm a trend follower. I have very simple rules for following trend, all discretionary. It's basically establishing a trend, making sure there's no roadblock resistance, as we spoke about there in gold up there, whatever it is. So I'm looking at the DAX at the moment. The DAX is the German 30. It's almost, as at the time of, almost at all-time highs here at the moment. When I looked at this morning, deciding to do the DAX, it was a bit lower than here now, it was a bit lower than here now, but I still think the DAX has got further to go. And I'm just going with that trend. There's no roadblock resistance for me. Ordinarily, I would be looking for a pullback. You can see my charts at the moment. Ordinarily, I'd be looking for a pullback into this zone here. So this is a liquidity zone which saw some sellers. Old resistance acting as support. Ordinarily, I would be looking for a pullback into this zone with stops below this support zone. Right. But because we're taking live trades, market orders, I'm going to be taking it as we speak, which may be at the tops of the market. Who knows? But I still like to trade. I'll put it like this: this is why I talked to you about you placing stops where you don't think you're going to be hit. Okay, right. So the 4-hour level here, we bounced off a whole bunch of times, all pretty much from middle of last week. This is a zone where there's definitely going to be some support at some point. I hate to use that word definitely when it comes to trading, but it's going to be a support zone. My stops are going to be below there. It's not going to be a 10 pip stop. It's going to be a nice little stop below here at the moment for trend continuation higher. These trades are good until Friday, aren't they, Boris?
Yeah.
We keep these to Friday.
Yeah.
So that's going to be good for me. So I'm going to place that trade there. I'm going to go in with another 3% risk on this. We'll have our stops. Where did I place my stops? Stops are going to be at 17,300. Let's have a look here. I do like this trading view trading. We haven't really traded on trading view before. So I'm going to place that there, and I'm going to leave that until Friday for profit targets. Do I have to put a profit target in?
No, you don't. You can just like let it go, and then you can close it out later. We can close it out for you.
Yeah. Okay. Well, I'm going to put that in.
We'll just mark it.
If it gets down there, the trade premise is wrong. The trade is possibly in for a trend direction, change back down to early 1700s.
It's actually, what's interesting. First time I think we've seen this on Trading Battle actually, where the idea is, okay, I'm going to put a trade in. The stop is in there, the risk is in there, and I'm going to let time happen, because sometimes if that works, that can work really, really wonders for you. It can just run a couple hundred points in your direction.
Absolutely, Boris. But in all fairness, I wouldn't generally do that with my own accounts. I have a bit more sort of thought goes into it. I mean, there's no real target above here for DAX. I mean, there's that all-time heights. An extension of this zone would take us up to about 17,500.
The great market wizard, I forgot his name. But he had his whole methodology was buy anything that hit all-time highs with a 1% stop, because historically he would test it. Once it breaks through all-time highs, it generally tends to run for tens of percentage points. So it was really interesting methodology.
John Maynard Keynes, you know him? Famous quote: "Markets can remain irrational for longer than you can remain solvent."
Exactly.
Go with it.
Exactly. Ashraf, what's your short-term trade?
Well, my short gold is not going well. So how about a CYA trade?
Okay. What's your CYA trade?
Well, I am short gold. It is going up, and I am looking at not that the 10-year yields are falling, but the markets really wants to push higher. Sorry, just want to see the 10-year. The 10-year is undecided. So you know what I'm going to do? I know that usually the NASDAQ and gold, they move hand in hand, right?
Yeah.
So if you're short gold, usually, if you're short gold and it goes up, would you want to long the NASDAQ or short the NASDAQ, right? So you probably want to go long the NASDAQ.
Yeah.
But that's a part of a pushing to the limit. So what I'm going to do, I'm probably going to go, so again, guys, when yields are pushing lower, NASDAQ is the one that gains the most percentage-wise. The Dow is the one that gains the least, and the S&P is usually in the middle ground. Right. Okay. So I don't think that it's a yield-driven trade. It's just, this is a range-bound market. Yes, we're doing leverage and so on and so forth. But I think I'm probably not going to go long the NASDAQ, which is kind of a mini hedge, a quasi hedge for my gold. I'm going to go long the middle ground, which is S&P.
The S&P?
Okay? Yeah.
Yeah. They're both pretty close to their daily highs. S&P is only 3 points off the daily high. NASDAQ is only 15 points off the daily high. So both are pretty good, as far as long.
Yeah. But then again, call it short term, call it whatever you call it. But this is a 3. Let's do the 4 hour and let's look at the chart and see what comes out of us in technical analysis, guys. So basically, in technical analysis, it's not looking, with the magnifying glass, whether the RSI is going to be 80, whether the 55 is going to break above the 200. It's what stands out the most at you, a price action, what grabs you. And then you try to get cute with the other stuff. When I say cute, I'm not being patronizing, but you really want to start with the top-down approach. In here, if I look at the 4 hour chart, I said, oh, maybe I want to go long the S&P. But if you look at a 4 hour chart, what stands at you? What stands at you is that we had some sort of previous support, which is now acting as a resistance. Right. As you can see, the 4 hour, the 3 hour will speak the same language. I was hoping maybe we're going to break above this resistance and then target this level and then come down. Right. But if it does go up, what are the probabilities? But if it does go up, will gold go up? And so it is a bit. I would like to buy it to sort of hedge my gold, but the market doesn't seem to be wanting to break, and then there is sort of a technical analysis argument affair that it's going to fail. Let me just look at one thing. Let me look at the daily. Doesn't look good either. Why? Yeah. Nah. Okay, let me just go back. Too much analysis leads to what?
Paralysis.
Are we reaching paralysis? How much time do we have? Oh my God, 15 minutes. Okay.
Yes. And I need to make you another trade. So just pull the trigger, do something.
Let's buy it.
Let's buy it. Let's break. Exactly. You know, remember, resistance is meant to be broken, right? That's the
Yeah, exactly. Okay, so
you need to put, you can put a lot in there, or you can put a percentage in there, whatever you want.
Let's just see, take profit. Let's say, yeah, this is going to be a bit tough. Short term, yeah, let's do this. So we're doing, you see this resistance here, 50.88.
Yeah,
it's some sort of resistance, simple, plain vanilla. So let's do 50.88. The problem is, if you go to 115, what I'm going to do, 60, you know, I'm going to do 70. Stop loss, 50.69.
Yeah.
Let's go for that. What are we risking? Okay, points.
You can. You want to do it in percentage terms. It will automatically adjust your
0.721 lot. Okay.
Okay. All right. Fine. Very good.
All right, guys.
Awesome. So, gentlemen, I want to ask you a little bit about your day-to-day activities. Specifically, you know, Ashraf, you run a very active trading group, and you also do webinars, and you do educational work. So, tell me a little bit about what is you doing, and you also, I think, have a webinar coming up very, very soon that you'd like to invite people to. Tell us a little bit about
that. Yeah. It's basically, you know, I had a premium service, you know, signal service started in 2011. The problem is that whenever I would put in a trade, I have to write it in Arabic, I have to write it in English, I have to put a chart, SMS. It was a hassle. So when we were making money, it was good. When we were losing money, I had to update it. I have to do it. So in 2020, in April 2020, when basically, you know, when the Fed went all in and it was a blindfold trade and sell the dollar and buy gold, people wanted more, you know, in-depth stuff. But so I said, I'm gonna open a WhatsApp broadcast group. Basically, people come in. It's a broadcast group, so people do not see each other. They do not see each other. They only see me. It's a broadcast group in English and Arabic. And I would issue trades, some with a stop, some without a stop. If we are long the DAX and it's going down, maybe we want to do in a hedge. What do? We don't short the DAX. We don't close the DAX. We probably short the S&P. And there is the reason why. We would go into gold. We would go into silver. This is a great thing because people have 20 hours. They have, from 10 a.m. London time until 9 p.m. London time. So we're talking about 10 to 11 hours. Have access to me. Whether they want to say, okay, Ashraf, I went to Bitcoin, and Coinbase asked me this question. I want to go into, okay, can I do this? Hey, Ashraf, what did you say? Which one do you like out of the Bitcoin miners? Marathon or a clean spark? And why? I asked them the question. It's a very good question. I post it to everyone. So people have action.
Just to understand the mechanics of this, how do they, it's a broadcast group. When do they ask you the question? Is it like, it's a private DM?
The question from one to me, it comes as an individual, as a WhatsApp.
Okay, so they ask you a private message, and then you answer to everybody.
I copy and paste. It.
Very good, very good. Yeah, so people can. That's what we do. Yeah.
And a lot of people have learned so much because people basically, you know, the guy is like stuck in NASDAQ and S&P, and then he gets something about Bitcoin or about why on earth is yield pushing higher, but NASDAQ is also pushing higher. And then we talk about that. And then there is a nice interaction. And then people said, hey, Ashraf, listen, I know you said to stop there. So can I move it? And I say, what's your size? And I say, give me a snapshot of your account. And this is what I do. Give me a snapshot of your account. Oh my God, margin utilization. Oh, 180%. Be careful. And then I'll say, do this, do that. But of course, it is not called advice. It is called only what I would do.
Right. But, basically you help people actually manage their trading accounts and their portfolios, not just simply give signals. Very nice. The description, by the way, of Ashraf services and links if you want to get a hold of his webinars. Which you're going to be. The thing is, you're going to be doing a free webinar to tell people about all of these techniques that you use. Right, that's going to be coming up, and we're going to post the link to that soon. Right? Is that?
Yeah, the webinar is going to be the day before the Fed. So the Fed Wednesday, March the 20th.
Right,
the famous Fed meeting. But we're doing one, and we're doing that.
And will that information be on ashraflaidi.com, or how will people be able to register for that webinar?
They will come to ashraflaidi.com. They will see me tweeting it. I will be tweeting the link, but they can come to ashraflaidi.com. I will post it. Don't worry, it will be available. Or they can just go to ashraflaidi.com, send an email, and say, hey, what about the trading battle offer? Okay.
Right. Very good. Yeah. Just simply do that. Get a hold of him. Ashraf's got, by the way, an amazing Twitter feed. You should absolutely follow him. Laidi at
thank you
at a Laidi. Andrew has got a very, very interesting new project coming up. Andrew has been running this very active trading community called City Traders, but now he's actually taking it up a notch higher. Tell us a little bit about your next coming up project, Andrew, and what it means.
Yeah, thanks for that, Boris. Okay, so as you said there, we run a trading community here at the City Traders, sort of vibrant community, like-minded traders. We've got lots of education. I've done some courses really for all levels of experience, from beginner right up to advanced stuff. We teach strategies. We've got trading tools, trade journals, risk managers, and what have you that people use for their everyday trading. So we've got, I say, a vibrant community. We're pretty much running it through Discord now. We've just moved from our sort of own community in-house to open up a little bit more to Discord, so people can find us on Discord, citytraders.com. I think the link will be somewhere. But we've also moved into the prop space. Now, when I say moved in, we've been a prop firm for the last 18 months. But we've basically shaken it up, and with all the turmoil that's going through in the industry, we've basically looked to go in a different direction. So we've partnered up with 8Cap as well. The lovely guys are sponsoring this. So we are a prop firm. I know there's a lot going on at the moment. And this is my screen. If you can show me this, show the screen there, Simon. So this is our trading community. We've got all the different challenges there. You've seen these before, but these are what I'm really excited about here, Boris, is
one of the most unique things about your offering here is this is the first time I've seen this, where you're offering a static drawdown. Is that correct?
That's correct, and that's what basically has caught off so many people in the past. This is a one-phase assessment,
right?
So
this is very unique. Let's explain to people why this is such a interesting offer if you're considering prop trading. In almost every single prop evaluation that you're working with, there's something called a dynamic drawdown, which means that basically the more money you make, the higher your stop moves against you, right? So, and in some cases, it could be even worse, where if you are, let's say, in a position, your equity rises quite a lot because the trade goes in your direction. You don't take the profit, but the equity rises, and then you because you're looking for a longer term trade, and then the trade falls. Your stop behind, at which point you're going to be stopped out on the evaluation, actually moves up even if you didn't take the profit.
Absolutely. Let me put some numbers to that to make it a little bit clearer for those that are unsure what we're talking about. So imagine you've got a $100,000 assessment. You've got a 10% profit target. You do well. You're trading. You're grinding away. You get up to say 105 grand. So you're up 5% now. So you're doing well on your way. And then you have the inevitable drawdown. We all go through drawdown periods. But with the relative drawdown, it moves with you, as you said. So your drawdown, if it's 6%, is now at 99,000.
Right.
So you've got 105,000. Your drawdown is now at 99. You have that drawdown, goes down to 99. You're out the game. But in reality, you've only lost 1% from your starting capital. I think that's pretty unfair. If we've got a 6% drawdown, people might say, well, that's a little bit low. Well, I want to find decent traders. If you're trading up and you're up 6%,
it's actually not low. It's actually not low because the industry standard is 10% up, 4% drawdown. So it's actually not low.
Well, that's good. I'm pleased. I mean, but if you're up, say 7% on your way to the 10%,
Yeah.
well, you got the 7% and you got the 6%. You got a 13% drawdown to play with. So it's a much fairer way, I think, of
no. It's
doing things.
eminently it's one of the most fair offers I've ever seen in my life, and I've covered the prop business quite a lot, as some of you may know. So this is a very interesting new twist on a very, very popular game that everybody's playing. Andrew has a 20% discount. The link and the codes are in the description box, so make sure you hit it, because I think that if nothing else, this is going to be a very interesting new evaluation challenge for those people that are they're inclined to do this. So I wish everybody good luck in their evaluation challenges, and certainly Andrew's new effort is going to put the odds much more in your favor than anything else.
And the other thing that we're also doing a 20% discount just for today's event into the education space as well. I think the team here are going to put in some links as well. But if you want to come and join our community and have all the, I live stream every day at 10 a.m. London time as well, so people can get involved in that as well with a 20% discount just for today on today's event.
Wonderful. That's great. Thank you, guys. Thank you. It's super interesting to have both of your product offerings. Last challenge before we got to go. The sabotage trade, my favorite trade of the offer. Here's the deal: you got to bet 5%, and you're going to put your opponent into a trade that you think is going to damage him the most. So large amount of size, and what you want to do is you want to put the trade into the opposite direction that you think will benefit him. So if you think that gold is going up, you want him to short gold. If you think that S&P is going down, you want him to go long S&P, because what you're trying to do is you're trying to play the devil's advocate in this position and see if you can sabotage his returns and everywhere else. So I'm gonna Ashraf, the first sabotage trade goes to you. You choose 5% size. What's the trade that you want him to take?
Boris, do you have to give me a stop as well, or how?
No. What we're gonna do is basically. If the stop is going to be a time stop, both time and target. So basically, at end of Friday, we're going to see if you were correct, and if you were correct, then boom, the trade really worked in your favor against your opponent.
Okay.
If you were incorrect, if you actually, let's say, chose short gold and it worked, then you actually benefited your opponent. So it both sabotages you and sabotages the opponents, just exactly like the way it works.
Yeah. Okay, it's a bit tough. Okay. Can you see my screen?
Not yet.
The blue screen.
Not
the
yet.
blue screen.
Okay, coming up. Yes, now we see it.
Okay, it's tough because dollar yen. It's a key one, right?
Yeah.
I'm not gonna go hard. I'm not gonna go hard on you. I'm gonna go into your territory, into your currencies. It's okay, so you can manage it. Okay, Andrew. I'm not gonna tell you to short Bitcoin, but here's the thing: dollar yen. It's kind of toppish. Okay. It's gonna top is 150.80. It's I don't know, maybe it would go there. If core PCE is strong, then it's going to go there. If jobless claims are weak, then it's gonna go there. So I'm going to try to think of a trade that is contrary what my main mind thinks. Okay, it's important to basically articulate the thinking here. So So here's the thing: we are at 150.30. It has to be a market order, right?
Yep.
Yes. You got to you got to basically close your eyes and hope that your direction is correct, or the opposite of your direction is correct.
I'll just tell him, hey Andrew, buy dollar yen at.
Well, you got to go market. Just buy it now, and then just
buy now. Buy now 150.30, right?
Okay, so I'll do that now. I'm putting in my 5% risk because we agree that's going to be equating to 3 lots on this.
That's going to be a big. So if dollar yen goes lower, that's going to be a big win for Ashraf. If it goes higher, then Andrew is going to be very, very happy.
So you want me to buy this, yeah?
Yes. Yeah.
Yeah, I want you to buy this 150.30.
I'll take that all day long. Thank you very much. Thank you very much.
That's funny. So one of the great things about sabotage trades is this is actually a perfect example of where there's always a buyer, there's always a seller. You think you're so smart, a lot of times because you think you're selling something, and all of a sudden somebody's more than happy to buy it from you because they have a completely different point of view on directionality. Great, which is what makes markets so great. So it's fascinating. We'll see. We'll definitely see how this plays out. This is a fascinating trade because it really can go either way in a big way.
It is a charity thing, and I'm being charitable with Andrew.
Well, wait till it comes to mine. Unfortunately, I'm not able to place a 5% risk on this, maybe to do with the other open trades that I've got on my margin. So I'll go in. I'll try and do a 4%.
Okay, that looks like it got done.
That's
rejected
rejected as well.
Oh, because the account is only like at 20 to 1. They just
3%.
Oh, yes, it's 20 to 1. Yes.
Oh, it's still. You know what? My God, okay, try 1%, and then maybe we'll add what's going on over here. Yeah.
Because my trades got rejected.
2%. It allowed me to do 2%.
Okay, it allowed me 2%. So I guess 2% is the most you can do. Okay, what about Andrew? What are you going to make Ashraf do?
Wait. What about the profit target? No
profit target. No, you gotta just. It's gonna be like end of the day on Friday. If you're right that that.
Yeah. I love this trade. You saw the inflation numbers out of Japan. They're doing nothing. You're seeing Suzuki giving all this hot air about it's not happening. It's happening. PCE is going to come in higher.
You're going to get tripped, man. This thing is going to fall like a bird. Okay. Anyways, let's Andrew.
Well, I'm sorry, Ashraf. I mean, I know it's a
Lockwood.
charity.
Lock me in, Lockwood.
I'm sorry. I know it's we're supposed to be friendly and all that, but Matt, but we got to win. It's a great cause I'm fighting for here, so I'm going to make sure I do my best. No, you're selling Bitcoin at this level, mate, and you are going to be in pain.
Ooh, right? This is really interesting. So you're going to make him buy Bitcoin at 56?
No, he's selling Bitcoin. He's going to be selling Bitcoin.
He's selling Bitcoin. You're making
he's selling Bitcoin. Bitcoin's going through the roof this week. It's going to continue going higher.
Right.
As we said earlier.
First there is. So do I choose the 8? Okay, guys, there is a little bit of interference in the sound, so let me just speak, please. So it's BTC USD 8 cap. Yeah, this is the one.
Yes, correct. All right, correct. Right there, 8 cap.
Just go here.
Yep. Choose that one right there.
Alrighty.
Just click on that. Yeah. And on the plus sign where it says the plus, right there. There you go.
Yeah.
Okay. And then you can close that out, and now you have the. And then you click on the symbol. Just close. And
I did.
You added the symbol. Now click the X button up top, all the way up top. There you go. And then you'll see the symbol in your watch list, right there.
Exactly.
That's it. Oh no, that's
this is it. I hope.
No, right there above BTC USD.
This one.
Yeah. Is that what it is?
How could you tell? How could you tell?
Oh no. Maybe where did you add your?
I added the 8 cap. This is.
I think you'll be at the bottom if you.
It'll be at the bottom. It'll be at the bottom.
This is the one, the bottom. That originated.
No, lower. Can you just move that window down? Move that big window down.
Oh, this.
No, that's a Binance one. You're not connected.
Oh,
why did it not?
All right, sorry. Let's do that again. Okay.
BTC USD.
Yeah. Here.
Yep.
Plus sign. It's added to the watch. Do I need to go to the watch list? Can I just click double and then we'll go to my chart? No. Okay. Let's go to the watch list.
Oh, there it is. I think I see it on the bottom there.
It'll be at the bottom, yeah. If you can move that window down.
That this window.
Yeah. Move it right down, and you should. There. Is that it there?
Oh.
That's it there, isn't it? Above, just the one above.
No, this is Bitcoin.
No, the one above BTC USD. The one above.
All right. Here's what we're gonna do. We're gonna have the staff make the trade for you. Don't worry about it. We'll make the trade for you.
I'm trying to play dumb. I don't want to get in the trade.
It's funny how both of you are so afraid to short Bitcoin. I'm more than happy. I'll sell you the whole house right now. I think it's going to go down. I think it's totally overbought. Okay, we will have the ops place the trade for you. The important thing is we got the trades in. It should be fascinating week for all of us to study how those trades play themselves out. both on the sabotage trade and on the forward trade. We're going to obviously catch everything at the end of the week. That's why you need to be able to subscribe to the Trading Battle, because if you're subscribed to it, we're going to give you an update exactly how all those trades went, and also, of course, give you updates on the future trading battles that we have in the next coming months. So please be sure to yes. So Ashraf is going to be short Bitcoin, correct? And you want to do it maximum size for him. Okay, I'm telling this to my producers. Just give him maximum size, because that's the pain trade that that Andrew is putting him in there, given his margin. So Andrew has maximum size on long dollar yen, and Ashraf has maximum size on short Bitcoin. Should be interesting to see how it all goes out. Anyways, guys, it's been wonderful. It's been really fascinating. Thank you for all the tremendous insights you've given us. Everybody, make sure you go to Ashraf's webinar. It's really a masterclass in trading, and it's absolutely free. So be sure to go to ashraflaidi.com and sign up for his webinar coming up in a I guess just a couple of weeks before the Fed meeting. And
one day before
the Fed meeting, correct? But make sure you get that link and sign up for the webinar. For Andrew, absolutely check out City Traders Prop offering, the first offering I've seen where the drawdown is static, which gives you tremendous edge. You can't even imagine the kind of edge this gives you in terms of being able to truly manage and see if you could pass the evaluation test. Those 50,000, 100,000 evaluation tests would be very sweet for people to pass. Guys, thank you again. This is Boris Schlossberg for the Trading Battle.
Thank you, Boris. Thank you, HCAP.
Thank you so much, guys. This is Boris Schlossberg for the Trading Battle. I'll see you guys in the markets over the next couple of weeks. Be sure to sign up for the next Trading Battle that we have going. Gentlemen, always a pleasure to have you with you. Boris Schlossberg for the Trading Battle.
Good one, Andrew.
Thanks, Boris. Nice to meet you, Ashraf. Good luck.
Cheers, mates. Bye-bye.
Cheers, guys.
Okay.